Now, Monday, we started the week with the Kospi down big time, almost 2%. That was because of fears of a slowdown or even a recession down the road. But today, it ticked up. And we're joined now on the line by global strategist Daniel Yu of Kiwoom Securities to help us sort through it all. Thank you, Mr. Yu.
Thank you.
Well, could you take us through today's trade?
Yes, as you said that last Friday, global market tanked. And because of that, on Monday, Kospi declined sharply by 1.92% and Kosdaq fell by 2.25%. But today, the market seems to be fairly stabilizing as the Kospi was up about 0.18% and Kosdaq did a quite strong run of 1.32% rise. It seems that the market's stabilizing after U.S. market stabilized last night after the Friday sharp drop. Currently, there's still concerns about the global economic recession. The trigger point was from Germany, where the manufacturing PMI came in at a very low number, below 45, well below 50. So the economic recession could happen in the future. That was the concern. Also, there was a yield curve differential changing, where 3-month and 10-year bond rate differentials turned to negative territories, and resulting that to create a negative yield curve. So quite a people were concerned about the economic recession. Still, it's an ongoing process.
Well, today during trade, we had Samsung Electronics saying it thinks its earnings for the first quarter this year are going to be below market expectations. Their shares down a bit during trade today.
Right. If that kind of news were hitting very heavily, then the stock price would have fallen much stronger. But nevertheless, it seems to be fairly stabilizing because of the perspective going forward into the second quarter and the third quarter. But as for the first quarter, yes, the earnings are expected to come in at a very low number. The previous estimation was somewhere between 40 to 50% decline over the operating profit year on year. But I think that it might be coming in at much below that number. The last year's first quarter number was 11 trillion won plus. Most likely the first quarter this year will be coming in at below 5 trillion. So it will be more than 50% decline. This will create some volatility of the Korean equity market because Samsung's earning is well, above 20% of the overall corporate earnings for Korea. But going into the future, why the stock price seems to be fairly stable? That's because the S10 sales seems to be quite picking up, and foldable phones that will be launched in April are receiving quite good reviews. So all being said, that the possibility of the earnings bottoming out in the second quarter, and most likely on the third quarter, the earnings will be picking up. So Q-on-Q numbers will start to look good on third quarter because of the demand picking up on DRAM, server DRAM side, as well as the handset. So yes, there is a concern, but if the stock prices falls because of those news, we do think that that is a buying opportunity.
Okay, got it. Now, shifting gears, shares in Europe and America were also hit hard at the end of last week because of these concerns over a slowdown, as we mentioned. How did those markets start the new week, though?
Yes, as I said, most of the market seems to be fairly stabilizing. European market showed slight decline further, but it was quite a small amount. If you look at German DAX index was down 0.15%, Frank's CAC down 0.18%, Euro stocks in general is down 0.16%, and also Italy was up 0.09%. All in all, it's about what's happening to the European economy. The indications that the German economy seems to be fairly okay, despite the manufacturing numbers are coming in very below number. But if you look at the non-manufacturing, the service index PMI number seems to be well above 54, so which means that the economy seems to be fairly stable. All in all, the yield curve differentials are hitting the market, but ex-Fed Chair Yellen have said that inverse yield curve is not a sign of U.S. recession. So therefore, European market as well as the global market seems to be taking that as an ease. And we do believe that what Yellen say is truth, that we don't think that economic recession will happen anytime soon.
Yeah, as you say, the Fed has backed off interest rates for this year. Interesting that you agree with Yellen that the inverted yield curve is perhaps overblown. Why is that, and what other factor or factors should we be looking at?
Sure. When yield curve inverse, people say that it is a sign of recession. Yes, most of the cases that is true. However, we need to look at not just the inverse yield curve, but also we need to look at the loan-to-deposit ratio of each economy. And if you look at U.S., the yield curve has inverted, but the size of the inversion is very small. And it is only inversion between 3 months and 10 years, and also 2 years and 5 years. The key number, which is the 2 years and 10 years, is still positive territories. Why people were concerned about the negative yield curve is because net interest margin declines due to the yield curve differentials changing to small number. And that means that no more loans may be coming out from the banking sector, and they're resulting into the economic recession. But when you have a very low loan-to-deposit ratios, bank can lend more, allowing margin to expand on lending more. So we think that it is that kind of situation. And most likely the economic conditions in general are bottoming out probably in the second to third quarter of this year in terms of looking at OECD leading indicators. So having said that, we don't think that economic recession will happen. And we're still in a territories where there's ample boosting measures that can be happen from U.S. as well as China. So we do think that the economy will be bottoming out pretty much in the second to third quarter of this year.
Okay, very good. Mr. Yu, we'll have to leave it there. Thanks so much for your time.
Thank you.
Daniel Yu of Kiwoom Securities with our market wrap-up.